Hello friends, welcome to Learning Sessions, and in this video we'll be covering the case study related to the BFM and in this topic particularly we will be covering the structural liquidity statement. So audio video quality seems to be working fine. Before starting the video, let me tell you that if you want to get full course videos, you need to visit our website iibf.info, where you can enroll into the courses, and further you'll be getting the full course chapter wise videos plus chapter wise previous questions, mock test and case study videos, and the complimentary access to the ePDF notes through our Android application. So without wasting any time, so let us start the session now. Over here we are having the case study. It says you are required to prepare structural liquidity statement as on 31st December 2019. Maximum volatility of the saving fund deposit in the last 3 years, it is given to be 12%, and maximum volatility for the current deposit is given to be 17.8%. Further, we are provided with the data in the table format over here, where we are provided with the different parameters, and further we are provided with the start date and the maturity over there. Now let me tell you, related to the structural liquidity statement, we need to place all the cash inflows and all the cash outflows as per the maturity ladder. So as per the residual maturity, you need to place them under the different maturity, under the different time horizons, where it could be related to 1 to 14 days, 15 to 28 days, 29 days to 3 months, and so on. The different maturity ladders are over there, and you need to place as per that particular criteria. So we will be considering two particular factors over here. First of all, the statement is to be prepared as on 31st of December 2019. So that would be the benchmark date we will be considering, so as to get the residual maturities. Okay, so let us take the first question. It says what is the amount over here of the current deposits which is to be placed under 1 to 14 days bucket. Okay, so we are basically concerned about the current deposit amount which is to be placed under 1 to 14 days bucket. Okay, so under the current account deposit, we are provided with the amount equal to 520 over there, and further in the question itself we are provided that with the data that the maximum volatility for the current deposit is 17.8%. so the volatile part of the current account will be placed into 1 to 14 days bucket, and the rest deposit is related to core deposit, that which will be placed under 1 to 3 year bucket. Okay, so under 1 to 14 day bucket, what part will be placed over there? 17.8% part will be placed under 1 to 14 day bucket, and rest would be placed under 1 to 3 year bucket, and rest would be placed under 1 to 3 year bucket. Okay, so over here we will be solving this particular question. So it says the total current account for deposit is given to be 520. So it will be 520 into 17.8%, and that comes out to be 92.56 if I'm not wrong. So the total amount is given to be 520. So sorry, the current deposit, not current account over here. The current deposit, the CD is given to be what? The current deposit over here is given to be what? So there is actually misprinting over there. It must be the CA over here. It must be the CA over here. That is a current account deposit is given to be 17.8% over here. So it will be 520 into 17.8%. So it will be 520 into 17.8%, and it comes out to be 92.56. Just let me mention it over here. So this is a volatile part which will be placed under 1 to 14 days bucket, and that will be the answer for the first question. Second question, it says what amount shall be placed under 1 to 14 days bucket for the saving fund deposit? For the saving fund deposit, the amount over there is 960, and the volatile part is given to be 12%. So 12% part will be basically placed under 1 to 14 days bucket. It will be placed under 1 to 14 days bucket. So it is, the total amount is 960. So 960 into 12%. So that is equal to 115.2. So that is 115.2. This particular amount will be placed under the 1 to 14 days bucket. Is that particular part clear over here? Next, it says that we need to calculate the total amount that will be placed under 1 to 14 days bucket. The total amount that will be placed under 1 to 14 days bucket, that we need to calculate. So what will be the answer? Now, as I told you, that the benchmark date, the base date that you will be referring, it is 31st of December 2019, because you have to prepare a statement as per this particular date. So the maturity date, residual maturity that you need to consider, and let me tell you a concept related to that. So liabilities are actually what? So if we look at the deposits, these are basically referred to liabilities. But when these liabilities are matured, these would be inflows or outflows. So when these liabilities mature, these will be inflows or outflows. So when you receive the deposit, it is basically an inflow. But when it is matured, when it is withdrawn, in that case, it is what? It is the outflow. So you need to understand this particular thing, that the maturing liabilities are cash outflows. Maturing liabilities are the cash outflows over here. And over here in the question, we were asked so as to calculate all the residual deposit which are to be placed under 1 to 14 days bucket. So this 14-day period will be started from after 31st of December 2019. That is from 1st of January to 14th of January. It will be 1 to 14-day bucket. It will be 1 to 14-day bucket we will be considering. So it will be 1st of January 2020 to 14th of January 2020. So we need to get all the data which is basically under that particular period. So over here, if you look at the 2020 entry, it is not related to that particular period. Further, it is also not related to that particular period. But if we look over here, that is related to January 3 and January 3 2020. These two entries are basically related to the 1 to 14-day bucket. Are you getting this particular point over here? That why we are placing the call money and the repo under the 1 to 14-day bucket over here? Because it is related to the residual maturity. It is related to just the residual maturity. You will not be considering the start date. We will be considering the maturity date only, that when these deposits or liabilities are going to be matured. Okay, when these amounts are going to be matured. Okay, so that the amount that we will be considering. So we will be considering the call money and the repo over here, because these are going to be matured on 3rd of January, which is falling under 1 to 14-day bucket. Okay, so none other entry is basically covering under 1 to 14-day bucket over here. But also let me tell you that saving fund deposit is also under the 1 to 14-day bucket, and this current account deposit also under the same bucket. So we will be adding them up all. So the total amount which is falling under 1 to 14-day bucket, it will be equal to 30 plus 40 plus 115.2 plus 92.56. So that will be the answer over here. So the total of this would be the answer. So it is equal to 30 plus 40 is equal to 70 plus 115.2 plus 92.56. So that will be the answer. That is 277.76. That is 277.76. So that would be the answer over here. That is the amount which shall be placed under 1 to 14-day bucket over there. Okay. Next question, it says, what amount is to be placed under 1 to 3-year bucket? What amount is to be placed under 1 to 3-year bucket? Kindly please do answer at the earliest. What amount will be placed over there under 1 to 3-year bucket? So now what particular maturity criteria, what particular maturity period you will be considering? You will be considering all those assets and liabilities which are going to be mature, within 1 year to 3 years. But that the maturity that we will be considering, that will be related to the maturity as per the maturity date. So it will be a period that will be starting from, because 1 year will be ending up at 2020, 31st of December 2020. So it will be the period that will be starting from 1st of January 2021 to 31st of December 2023. 1st of December 2023. So that is the period that you will be considering. That is the period that you will be considering from 1st of January 2021 and for the 31st of December 2023. That will be the period that is the maturing, which is having the residual maturity of 1 to 3 years. You need to consider all those assets and liabilities which are placed over these maturities. Okay, so we will be considering this particular part will be considered. And also this will be considered maturing in 2021, 2022 and further 23. So these all will be considered over there. So what is the amount related to this? It is 100 over there, plus 300 plus 200 plus 100 plus 300 plus 200 plus 100 and further 270 and 150 plus 270 and plus 150. So that will be the amount that will be adding up over there. If I am not wrong, kindly please cross check over there. So this particular date is falling under this particular criteria, this particular period, that is April of 12, 2021, and further after that, May 5, 2023. May 5, 2023. This is also there. July 14, July 12, April 11, September 26, 23. So all these particular dates will be falling under this particular period. And also also you need to basically understand this particular part, that out of 960, that is a saving fund account, the 12% part was volatile. The 12% part was volatile, which was placed under 1 to 14 days bucket. But the rest part, that is the 88% part, was to be placed under the 1 to 3 year bucket. If you are you need to memorize, I just told you that this is related to the core deposit, that will be placed under what? That will be placed under 1 to 3 year bucket. Okay. And also related to the current account, 17.8% part was related to what? It was related to 1 to 14 day bucket, but rest of the part is to be placed under 1 to 3 year bucket. But the rest of the part is to be placed under 1 to 3 year bucket. Okay, if I'm not wrong. So that will be equal to what? That will be equal to 960 minus 12% plus 520 minus 17.8%. So that should be our answer. So it is equal to 100 plus 300, 100 plus 300 plus 200 plus 100 plus 270 plus 150. That is equal to 1120. And for the 960 minus 12%, that is equal to 844.8, and plus 520 minus 17.8%, that is equal to 427.44. So you need to add them up all. So it will equal to 844.8 and plus 1120, that is equal to 2329.24. So that will be the answer related to that particular question. Okay, so that would be all related to this particular case study. I hope that you must have understood the concept well. So you need to keep this particular thing in mind, and that would be all related to this particular video itself. So if you have liked the video, kindly please do hit the like button, and further, if you want to get all the videos related to the BFM, ABM and the retail banking, do enroll right now and at our website iibf.info. And if you want to join our WhatsApp group, you need to WhatsApp us writing your name, mention CAIIB along with it, and WhatsApp it to the number 83609444207. We will be adding you to the appropriate group. So thank you so much, and see you again in the next video.